Hello and welcome to today's Stock Watch. So 2020 has been a very detrimental year for oil companies in general as the pandemic hit output hard and there's no signs of recovery until at least 2021. As we close the first full trading week of October, I wanted today to look at two of the biggest multinational oil and gas corporations in America, which are Chevron and ExxonMobil. Chevron is now the largest US oil company by market cap after overtaking its rival ExxonMobil. Chevron closed last week with a $142 billion market cap, surpassing Exxon's $141.6 billion value. While Chevron is the most valuable oil company now, it's a fraction of its former self. At its peak in 2014, the company had a $256 billion market cap. However, shares have fallen more than 45% from their high, with most of the damage coming this year as they've declined 39% due to crashing crude oil prices. The past decade has been a tough one for oil producers everywhere, but Chevron has managed to hold its value for most of the decade. Both mentioned companies have been long favorites among dividend investors, but Chevron held up better and paid income better to investors. But the real story here is not how much Chevron has actually risen, it's more on Exxon's decline. Since the start of 2020, Exxon's value is down a whopping 50% compared with Chevron's 39%, which I previously mentioned. At its peak in 2007, ExxonMobil had more than a $500 billion market cap. It has since shed more than 70% of its value. But oil price volatility is only part of the story. Another significant driver in a shift in investor sentiment away from fossil fuels is towards renewable energy. Not only are renewables cleaner, but they're also growing faster due to the rapid decline in costs. That's allowing renewable energy companies to generate strong earnings growth, while oil giants such as Exxon and Chevron are seeing their profits eroded by crude prices. This trend will likely become even more pronounced given the chilling analyst prediction, which estimates that oil demand could have already peaked. That's leading investors to pivot towards renewables, so it could mean that oil may be left in the dust. So I just want to take a quick look at Chevron first of all. So like most of the US stocks, we've had this depreciation due to the pandemic, and then we've had the recovery, and now we're seeing levels being tested and a slow descent on the downside. So what I want to focus on mainly is this, I'll just zoom in, is this channel on the downside for the last couple of months. And from what I can see, we've now broken out of this channel and now looking to the upside, but there has been a bit of resistance roughly around the $75, $76 range. So I just want to drop it down to a 4-hour chart just to get a bit more of an intraday perspective. So on the 4-hour chart, I'll just take a Fibonacci from the recent highs to the lows that we saw recently, and what I'm seeing now, just zoom in, is we've got some support on the $74 range. It is Columbus Day today, so the session will be closed until Tuesday, so it will give the market a bit more time to react to any other news while the market is closed. But what I'm expecting is if it does penetrate this line, we could easily see further downside to roughly towards the $71 region, which is about here, and that's a confluence of the upper regression. The prices are trading very far away from the cloud at the moment, so it's another indication that it will take a while for these prices to be tested here, which is roughly about $76, which is where we saw the previous high in the last session. So this is what I'll be looking at when the markets open tomorrow. So a quick look on Exxon as well. So from what I can see, again, we've had this steady downturn from the pandemic hit. We've had a bit of an upturn, but it's depreciated more than Chevron, hence Chevron overtaking it in its market cap value. So again, we've seen a steady decline in the prices here. I'll just drop it down to a 4-hour chart again. So again, this 4-hour chart roughly shows what Chevron has done. It's gone to just breaking out of this descending channel at the moment. I'll put in another Fibo just to see what the levels are and the possibilities from the previous. So I just want to zoom in again just to get a clear perspective. So now we are basically hovering around this area. Again, it's a bank holiday today, so price is not going to move until Tuesday. So we've got roughly a bit of a support at the $35 to $35.50 region here. So as markets open, if we do not get another test at this zone, then I'm fully expecting it to start falling, possibly back down to the $33 area where we saw prices recently. It will be a very big ask if it gets tested again at the $32 range and breaks that, but I probably expect for the next one session that it will test the upper channel, and then this will possibly give us an indication whether prices will start to pick up back towards the cloud and obviously penetrate it up to the $36 area. So that's all for me today. Thank you very much for joining me. If you have any comments, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead. Bye for now.